So the module for the automated strategy builder specific for the VWAP Predator. So in the filtering system, we have the entry parameters up here. We're going to go through each one in turn. So again, like a lot of the others, the entry quantity, now this is the initial entry quantity. Remember, the VWAP Predator is there to scale in and add more as we go along. So that's our initial entry quantity there at number 1. At number 2, we have the entry order type. We're always going to go with the stop market to begin with. And then number 3 is the buffer. So this is the buffer technology. And again, there is a PDF in all of the ASB boot camps, the training for the buffer technology. But basically, if it moves too fast through the stop market, it doesn't get taken, it will automatically switch to a market order and a maximum, in this case, of 3 ticks if it were a long above that stop market order. If it's 4 ticks, it just won't take it. And number 4 is the entry expiration. So with the VWAP Predator, the default is 10, but really you need to be entering 1 or 2 bars after that signal candle, because it's that signal bar is signaling that there is momentum building. So it shouldn't take 10 candles to actually take that in. So be very, very aggressive with that figure. You know, when you're optimizing, and we'll do an optimization class coming up after this, you need to be at 1 or 2, maximum 3. Entry offset ticks, that's for your stop market order, at least 1 above the high of the signal candle for a long or the low of the signal candle for a short. Number 6 is the minimum required heat map count. Always start on your optimization of 6 out of 6. Total confirmation is what we're looking for as a starting point when we're doing that optimization. So minimum risk is important. You don't want a risk that's too small. So at certain, when we get the open again, the VWAP and the VWAP extensions are very close to each other. So you really could get a very small, like 5 tick risk, and it'll just take you out. So when you're optimizing, look at that minimum risk. Starting point is 10, but you know, it could be 15, 20, because if it's too small and keeps taking you out, you need to make sure you've got a decent size of risk to begin with. And then number 8 is the maximum risk. Again, I've set this at 50, but again, you're going to have to work. That's from the pivot to the entry line. 50 ticks is a starting point. You may want to be more aggressive with that. So you may find that at 50, you're getting your maximum drawdown is a certain number. But if you're reducing that max risk, obviously you're reducing the amount of trades, but you're trying to get the best fit for those max drawdowns, and it may be less than 50. So the minimum Guardian Zones risk reward, so that's from your stop to entry, and then to the next Guardian Zones is 161%. You can reduce that or adopt, you could put it at 200% if you wanted to, or down at 100. Number 10, this is the bit that's it's obviously different for the VWAP Predator. We're allowing multiple entries, and that box is checked. Now, number 11 is max bars from last entry. So if we've got our initial entry quantity 1 there at the top, and in this case we're saying 10 bars, if you are within 10 bars from the last entry and you get another signal, it will take another contract in. And then also a maximum ticks from last entry is 50. Now, I would say 50 is quite a lot, so you're going to reduce that number. But also the max bar from last entry, and I'm going to do some examples here. If you leave it too long, momentum may start to wane and it'll pull back. So you need to be max bars something like 6 or 5. But again, it's about the instrument that you're optimizing for and getting that line of best fit. Now, number 13 is the entry quantity for each edition. So when you get another signal candle and it meets the criteria from max bars from last entry and max ticks from last entry, the entry quantity in this case is 1. So you're going to add 1 more contract. Then your maximum position size is 3. So you've got your original entry is 1 contract, and then you're allowed 2 more before your max position size of 3 contracts there. So, and that max position size will really depend on your account size, purely because you'll need the margin for those 3 accounts or 5 accounts or 2 accounts. Then we've got the entry parameters, the exit parameters, sorry, 15 there. Stop loss offset is 1. So when we got that entry offset, we've now got an offset of 1. So if we're going long, it's 1 tick below the low of that signal candle. Use stop loss update, which is always a good recommended thing. So in this case, number 17 is when the price moves through 25 ticks, we adjust the stop to 5 ticks above the entry for a long, below the entry for a short. Number 19, you've got 2 more options in there to do further stop loss updates. So you could say, right, 35 is 15, and then 55 would be really aggressive at 45. So there's options in there. There was also an option there for number 20 for take profit distance. So when a move goes 100 ticks in this case, it would just close all contracts out. But again, when you're optimizing, you've got to look at that average move of of those trades that you've got and adjust that to get the average, probably 15-20% below the average, to make sure you collect a lot of those. And then number 21, exit on Guardian Zone touch. So when it next meets the next resistance or the next support, you're just going to take the profit and close down the trade. That is checked. You can uncheck if you wish. So next we have the VWAP Predator parameters. A lot of these, the bands multipliers, are default, and really, unless you're extremely advanced, I wouldn't advise you to change that. Number 23, show VWAP is unchecked. So to speed this up, you don't need to see the VWAP. The algorithm still produces those buy and sell candles and signals and still does it. So, to take away that drawing effort from your computer, you can uncheck that, and you can uncheck number 24, the moving average, because that will not affect the performance of the algorithm to identify those signals and execute those orders and everything like that. What it does is allows your computer to run a little faster. And then we have the heat map parameters at number 25 here. Again, you can change that from scalping to day trading. Show heat map, that doesn't really drain resources enough, and if you're colorblind, you can change those colors as well. So those are specific for the VWAP Predator. So let's have a look at a couple of charts and see some examples. So this is a short. We get the price action moving up to this resistance zone, and we get a big rejection of those highs, and we get a sell signal at this point here. We get a market order, so it doesn't take the stop market order because it goes through quite quickly, but we get a market order at this point. So the next thing to understand is we use these VWAP extensions to adjust trailing stops. So when the price action goes through this second band multiplier extension, we then go to the one above to start where we adjust the stop to, and that will continue to move down as price action does until we're finally taking out when it pulls back. We also now see that if this is the entry candle here, we're 1, 2, 3, 4, 5, 6, 7 candles for another sell signal at this point, and that taken in there with that stop market sell. Now, in this situation, we can see this was way too far and it did pull back. Now, yes, it would have been a slightly profitable trade, but we got another entry down here as well. So this is where we've got to be sensible in that parameter of the bars since last entry for our multiples. So we want to be in the first 3, maybe 5 or 6, depends on the instrument, depends on the time frame. But if it's going too long and then we add another one down here, maybe it's gone too far. Yes, we're adjusting the stop, so we're still locking in some decent profit, but you've got to be very sensible when you do that, and we're going to go through that on our optimization classes. So this is another example here. There's a couple of trades in this. So we're going to start from that bottom left trade here. We get a buy signal, we get a stop market, we ended up getting a market order in the first instance here. And then what happens is we come down and we get a Guardian Zone touch. So we exit for a little bit of profit here. We can see that close, market, sell, exit at Guardian Zone. Okay, so it just moved up, came down to test, and it's just took that profit out. But then we get another signal candle at the same time. Now we get a market buy, and then within 2 candles we get another buy signal. This is what I'm talking about keeping that very, very tight for those additional candles. So that's now our signal candle there. So now we've got 2 contracts in very close to each other, and then it really does run. So this is a stop market order in this particular case, and then it runs until we hit the max profit drawdown. So the max profit drawdown is covered in the P&L section of the education for all of the ASBs. So we have a max trading drawdown once it goes above a certain profit. We can see down at this point here, at the bottom of the chart where my cursor is, we see the hashed line. That's where the max drawdown will be, and at this point it just comes back and takes us out and takes the profit. But also notice this buy signal up here, we didn't take another one purely because it was too many candles from the previous entry. So this previous entry candle is there. 1, 2, 3, 4, 5, 6, 7, 8. Okay, so being very aggressive at 5 gives us the runner, gets us a nice profit. And again, that trading max drawdown was taken there. So that actually will not trade again for the rest of that trading session. Another example, this time on short, where we have a sell signal up at this point, a market sell, and then we get it moves through enough ticks for the break even, stop loss adjust, and it takes it out. Okay, so that's an example of having a very aggressive stop loss adjust to make it risk free, and then it comes back and takes it out. The next we have a sell signal at this point. Okay, so we have a sell signal and we have a market sell, and then from this entry candle we have 1, 2, 3, 4. We have a further candle sell signal, so we get another market order at this price here. This time we get the stop market, so nice and aggressive with that entry, no market orders there. Then we get another one at this point here. So again, remember, entry candle 1, 2, 3, 4, 5, 6 for this particular one, and then it takes us in on the next candle. So we've got 3 contracts running down. Again, we go through where we get to that max profit drawdown, and as soon as it pulls back against us, it takes us out and takes the profit. So we're not giving much away from that really big move there. So again, very, very simple. We're going to do some examples on the training bootcamp for optimization in the next module.